Good evening. This is Jerome Nugent-Smith from Melbourne, Australia. Today is Tuesday the 4th of October 2011. In this video I want to talk about the 2011-2012 global stock market crash, which of course will include the UK. I'm predicting that the stock markets on average around the world will fall by 40%. Some markets more than that, as they did in 2008, 2009, some less. For example, in 2008-2009, the percentage fall in Russia and China was somewhere between 55 and 60%. In most countries it was between 30 to 40%. So between now and the middle of 2012, I'm predicting on average a 40% decline in the UK stock market. That's a massive wipeout of worth for investors and the average worker whose funds are tied up in pension and superannuation funds. I'm also predicting that the global financial crisis version 2 will occur around the same period. I believe that the US is already in a recession, although the statistics at this stage are lagging the actual results. Turning now to why I believe the global stock markets will fall by on average 40% is firstly that the fundamental causes for the 2008-2009 stock market crash have not been addressed. Secondly, in many countries, particularly the United States and much of the European Union and Eurozone, the situation with regard to government deficits, budget deficits, and the general health of the economies is at best far worse than what it was in 2008. The current Greek debt crisis and Eurozone debt crisis is just symptomatic of a greater malaise that's occurring throughout Europe and in many other countries throughout the world, and particularly the United States. Britain is obviously not immune to what is happening in the Eurozone, although not a member of that economic organisation. It is, however, a member of the European Union, and it will be impacted by what happens with the Eurozone. In my opinion, the Eurozone is a fundamentally flawed economic model. It's something that should not have been created in the first place and should be disbanded, and the quicker it's disbanded, the better. It's also a very dramatic form of economic socialism, taking from primarily one major economy such as Germany and the German taxpayers to fund what is occurring and has occurred over a period of years in Germany and will follow in terms of Italy, Spain, Portugal, Ireland, the Baltic states such as Latvia, Lithuania, and so on. So in summary, reverting to the UK situation, I'm of the view that over the next 9 months there's going to be a dramatic fall in global stock markets to the tune of on average 40%, and the UK stock market indices will follow suit. I also believe that the situation will be much more prolonged compared to the 2008-2009 global stock market rout. Further updates will be provided in due course. Thank you very much. Bye.